Hi, I'm Jean Cunningham. I'm the co-author of Real Numbers, Management Accounting for a Lean Organization. What really do accounting and lean have to do with each other? Well, one of the basic tenets of lean is continuous improvement with respect for people. And as a CFO, I realized that the financial information that we were providing to the organization on an ongoing basis, just most people didn't understand it. And I just didn't feel it was respectful to provide information within the organization that people didn't understand. Money's one of the key languages of business, and so how could we expect that people could understand what was going on with the business, drive continuous improvement if they didn't have information to tell them what was going on and what was the score? So in our company, as we began to implement lean principles and inventory began to fall within the business, our financial statements really became less and less relevant within the organization. In fact, people would fall asleep during our company meetings because they didn't really understand the financial part of it. And so we needed to do something different. Lean accounting really has two elements to it. One part is making financial statements easier for people to understand and to use in decision making within the organization. The other part of lean accounting has to do with applying lean principles that work so well on the shop floor, things like pull, waste elimination, one-piece flow, and applying it to the accounting operations itself. But the part of lean accounting that I think is the most radical part is to throw away our standard cost accounting systems and replace it with something that we call plain English financial statements. Replace it with metrics information. Replace it with leading indicators of key performance indicators of the organization so that you have some feedback about what's going on within the organization. Most lean leaders at the shop floor feel frustrated because the financial information doesn't really give them good feedback about, has the fact that I've reduced walking time in the organization created any value for the organization? Has the fact that I've freed up space on the factory floor really created value for the organization? And so they're looking for, what can I use? How can I describe what's going on within the business? So lean accounting is really the ideas that the information of the business is simple. There's revenues we receive from customers that align around value streams or product lines. There's some kinds of costs that vary directly with volume that are also aligned by value stream. And then there are the other costs of the organization, the money that we spend for people, for benefits, for buildings, for utilities, and we want to understand them as individual parts of the equation. And so as we do our lean efforts and that we reduce scrap or we reduce the material content of the product, that we can actually see that on our financial statements. So lean accounting is about making information in the financial systems more relevant to the activities of the shop floor and the activities of the overall business. There's a few key elements of lean accounting and the thinking behind lean accounting. One has to do with variable contribution. So these are the variable revenues and costs that vary with volume. So typically with a product company, variable revenues would be the income or the sales, and the variable costs would be things like your material content, maybe your sales commissions. And then you have all the other costs, the cost of the people that you hire, the buildings that you have, the equipment that you have, your sales force, your accounting team, and we're separating those variable components from the more fixed components. That's one principle. Another principle is to begin to merge together into value streams or product lines. These are the revenues, these are the expenses associated directly with this value stream, and separating those from the costs of the organization that support across the board, that support all parts of the organization. And the third part of it that I think is very helpful for most companies is to take the specific accounting transactions that are in place specifically to meet generally accepted accounting principles and isolate them on the financial statement so they don't become confusing to operational leaders. Most of the people that have adopted lean accounting have done it in a stepwise fashion. They don't just say one day, oh, I'm going to throw out all of my existing reporting. They say, what are the main changes that I can make? How can I simplify the information? Maybe they do it in a side statement to start with, an Excel statement, showing it around, showing it to different people and saying, do you understand the business better this way or the way we're reporting it right now? And getting that voice of the internal customer about what meets their needs better. Then, after getting that feedback, they begin to report in a new way, trying it out, adjusting it as they go, and eventually we'll say, you know what, we don't need that old stuff anymore. Let's get our auditors involved, let's get our bankers involved, and let's make a change. At the same time that they're making changes with their financial statements, they're probably also making changes in terms of the metrics that they have for the business, complementing some of the traditional metrics like earnings, growth rates, with things like on-time delivery, safety, lead time reduction. So beginning to complement the mix of key indicators of the business so that they really have useful information about what's going on in the business, not just the end result or the outcome in the financial reporting. Changing the financial statements really can be, for some companies, seem like an overwhelming amount of work. The larger the company, the more divisions, sometimes it is more work. Smaller the company, less work for transition. But why would I go through this transition at all? And I think what I found in doing this is that it really fits with continuous improvement with respect for people, because now instead of just a very few number of people understanding the numbers of the business, more and more and more people understand it. And people start to feel that they can see a direct relationship between the work that they've been doing and the improved results of the company. It helps with engagement, and it helps people feel like that they can identify with the company, its mission, and the overall results. Sometimes people in operations get frustrated because they can't really get the attention of the finance and accounting department. They're, so busy in closing the books and managing the transactions of the business that they're maybe not present as much in operations as you'd like them to be. So I think, though, you'll find that if you can get the attention of finance and accounting people, that they do have an interest in operations. So my suggestion to getting started was to invite them to your improvement events, either to participate on the Kaizen event, or maybe even just come to the presentation as a starting point. Ask them to join you at your daily huddles. Come down and see what's really going on. And begin to get to know each other's names, look at the pace of the organization. Sometimes, we in finance and accounting, we don't really know what our role is on the shop floor. And so someone to guide us and coach us that they're needed and that you welcome their input to the process. So I think it's very much worth a try. I know for me, I've always loved manufacturing. I love spending time on the shop floor, and my insights that I gained from the shop floor about what's really important to the business, I think really helped me to do a better job at providing the right kind of information to the business, improve decision making, and overall really changed my life. I mean, I love lean, and I really love the accounting function. I think we have a very important purpose in the business, and when we can unleash that potential, it's really good for everyone.